Hello and welcome to the TM Tax Practices video series, Getting Ready for Tax Season. This is video 2 of 9, where we will be doing a walkthrough of the individual tax organizer. Hopping right into that, we're taking a look now at the cover of our 2021 individual tax organizer, and this is in fact the organizer that we will be using to prepare your 2021 individual tax return here at TM Tax Practices. If you are not going to be using us for your tax preparation needs this year, that's okay. Stick around. This is a pretty general tax organizer, so you'll be able to benefit from going through this as well. As you can see toward the bottom, we do provide you with the mailing address and email address. Those are in fact the addresses to where you would want to send this organizer after you filled it out and your additional information to get your tax return prepared. We do have a secure upload alternative. If you would like to use that, please contact us and engage our services, and we will provide you with that information. Next, in the organizer, you will typically find an engagement letter. The engagement letter is basically to go over the expectations of you as the client and taxpayer, as well as what you can expect from us as the tax preparer for you. You're going to put your name here at the top, not the name of the business or tax return, just your name. And then below that, we ask that you put in the federal tax year for your individual tax return, as well as the state or states, if applicable. You're going to put that in here. Now, we are going through the individual tax organizer. If this was a business organizer, you would also be filling out this bottom section here. I should say, instead of also, you would be filling out this bottom section here instead. And then go ahead and read through this information. It's going to go over things again like the expectations, scope of services, electronic filing requirements, how we handle fees and payments. Does go on into the next page and talk about liability, document retention, confidentiality, and then just your understanding of the agreement. So again, read through that, and we'll ask you to sign. Next, we are going to look at the first page where you are going to start filling in your personal information. Starting at the top, we ask for the taxpayer and spouse information or name. And one question that I get here is, which is the taxpayer and which is the spouse? Who's who? Well, honestly, it really doesn't matter. What matters is that you stay and remain consistent in who you list as the taxpayer and the spouse year to year, because IRS does match up that information. If you switch it up, it can take a little bit longer to process your return since they have to reconcile some things and change that around. And obviously, you're going to go ahead and put in your social security number and date of birth. Now, if you are sending this via postal mail or email, we would ask that you omit that information. Once we have the organizer, we will be in contact with you and get that information from you. If you are going to upload this securely through the portal, then go ahead and put that information in. The has IP PIN area, identity protection PIN, is what that is. You'll have one of these if you've experienced any identity theft with IRS. They will assign you a PIN, or if you had any identity theft or your identity has been compromised, information compromised in the past, you can actually request an IP PIN from IRS. And this PIN is required in order for them to accept your tax return. So if you've already gotten a PIN, we are going to need this information in order to get your tax return e-filed. The next line is the name of the person to whom all information should be addressed, if not the taxpayer. So this is going to be in the event that perhaps this tax organizer is being prepared for a dependent, or this tax return or organizer is being prepared for someone to whom you're the power of attorney. In those types of instances, you're going to go ahead and put your name here so that we know who to contact. And this street address is going to be the address that shows up on the tax return. This should be your primary residence address. And then we are going to ask for the occupation. Here, pretty straightforward. The rest of the information in this area is just going to be some contact information, so your phone and email. The next area is going to be the filing status at the end of 2021. If you were unmarried at the end of 2021, you're going to choose single. If you have dependents, you are going to list that information a little bit later. And if you've checked single and you put dependents in, we will be able to determine from there if you qualify for head of household. If you are married, you are generally going to check the married box. This is going to indicate that you are married filing jointly. And widowed would be if your spouse died prior to the end of the tax year, you're going to check this box. In the rare instances where you do want to file as married filing separately, you're going to check this box. Usually, this is not going to be the most beneficial filing status to choose. Most of the time, the reason why one might choose this is if the other spouse may have had some IRS controversies or tax liability, and filing jointly is going to compromise your refund. Then it might be worth considering. Otherwise, you're generally going to be choosing one of these two boxes, single or married. And then there will be a series of questions to answer that will indicate varying things for us while we're preparing your tax return. And the questions can be pretty straightforward. One that I do know that people look at and kind of skim over is the presidential election campaign fund and what that is. And basically, this is just saying yes or no, I want to allocate $3 of the income tax that I have already paid in to the presidential election campaign fund. It's not an additional $3. It's not going to come out of your refund. It's not going to cause you to have any additional tax. It bears no weight on anything to do with your tax return. It's just you volunteering to allocate $3 of the tax you've already paid to this fund. Now, this is actually a new question for this year. IRS is checking into virtual currency, like crypto, for instance. They are simply asking at any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? Yes or no? And the purpose of this is because virtual currency is not yet regulated by IRS. It's not 100% reported. So now they are putting this information in here to get you to self-report. Can you be claimed as a dependent by another taxpayer is the next question. This is going to have weight on the standard deduction if you're taking a standard deduction instead of itemizing. If you are unsure if you can be claimed as a dependent by another taxpayer, then you will want to go ahead and watch another of the videos in this series where we do actually address who or what is a dependent, who qualifies as a dependent. And then there's a number of other questions. This one is pretty self-explanatory. These two questions are with regard to the economic impact payment. Read through those, answer those questions, put in the information as requested. What I will point out to you here is that you should have received the notice 144C during the 2021 tax year. However, If you have misplaced or discarded that, you will also receive a letter 6765 at the beginning of the 2022 tax year. And this is going to provide you with the final accounting of economic impact payments you received in the 2021 tax year. And this identification information below will need to be filled out if you live in a state that has income tax. If you do not, you may skip this section. Finally, on this page, we are asking for your banking information if you would like an automatic deposit of your refund or an automatic withdrawal of any tax liability you owe. When you put in your information, we do need you to indicate clearly in this section if, yes, I want a direct deposit of my refund, or yes, I want a direct withdrawal of my tax liability, or, vice versa. No, I do not. You're going to put that in there. All right. So now we are looking at dependent and other information. A lot of information here is going to be fairly straightforward. Here you're going to be listing the first and last name of the dependent as well as their social security number. It's not the same IP PIN, but same idea. If the dependent has an IP PIN, you're going to need to provide that information, provide the relationship to you, son, daughter, mother, father, months in home for this tax year, so this should not exceed 12 months, the date of birth of the dependent, and then you're just going to check box if they are disabled or a full-time student. Here to the right, you're going to be entering the child care expenses. Now, the total of these expenses should equal the total of the amount paid down here in the child and other dependent care expense section. Now, before we get down there, I do want to point out that we do ask that you list dependents who are required to file a tax return here. Again, you can hop over to the dependent video and make sure if you are uncertain. And this, again, is another straightforward question, yes or no, with regard to the advanced child tax credit payments. And we do provide an area here for you to list your estimates. This is not, however, where you are going to list any withholdings you may have had, let's say, on a W-2. This is where you're going to list any estimated tax payments you made. The first area is for overpayments applied from 2020. So if you were entitled a refund for the 2020 tax year, but instead you chose to have that amount credited to the 2021 tax year, you're going to insert that information, just here in amounts, and then likewise for the various quarters of the year. You're going to do that if you made any federal estimated tax payments, state, or local. And the next page is the health care coverage questionnaire. This is asking about coverage for all members of your household. Again, this is a fairly straightforward section. So we're going to ask you to read through, indicate the coverage. And these questions that we are not going to go through in detail here are various ways that you can apply for an exclusion for not having any coverage. So you're going to read through those and check yes for any that apply to you. And the next section we're going to get into is the income section. And the income section is pretty straightforward, right? We are looking for who you received the income from and how much that was. And basically what we're trying to do is we're just trying to match it up to one of the statements we're looking at here. This is a W-2. Now, the W-2 you receive may vary in appearance slightly, but all the same information. So what we're looking for is who paid you and the amount that you were paid. again, so that we can match that information up to this form. Likewise, if you received a 1099-R, we are going to be looking for the same information. We have provided these forms today simply as a quick illustration so we can all make sure we're all looking at the same thing. But this is the page of the organizer that you will be providing this information on. The next section is going to be if you received 1099 miscellaneous income. This is what the form would basically look like. Now, on the 1099 miscellaneous section of the organizer, we are looking for these two boxes. Box 3, other income. And box 15, non-qualified deferred compensation. This is where you're going to pull that information from. The rents and royalties in boxes 1 and 2 would come later. Likewise, the 1099 NEC. If you were accustomed to receiving a 1099 miscellaneous for non-employee compensation, you may have noticed that the forms have now split and you would receive a 1099 NEC for any non-employee compensation. And the page of the organizer looks much the same, but this is where you're entering the information so that we can make sure we have all of the appropriate income statements included for you. Now, you could receive a 1099 DIV where it is going to list in boxes 1A and B your qualified dividends, may also list some capital gains distributions. You are going to put this information in the organizer for us from boxes 1A and B. We do ask for the account number. This may not actually be your official account number, but instead an identifying number. That's fine. We are simply looking to make sure we can match what you've put in the organizer to your income statements. Same for the 1099 INT. Now here is the page of the organizer for those two sections of dividend income and interest income. And you're going to put the account number and payer name and differentiating ordinary dividends from qualified dividends for us. Now the 1099B can look like this, where it basically has one description of property, the date acquired, date sold, proceeds, and other cost basis. This is all information that you don't need to stick into the organizer if you are providing us with this form 1099B, or you can get this form 1099B, which is going to be a combined consolidated brokerage statement. So this is going to include your 1099 DIV, your INT, and your 1099B that we just looked at. That is going to list your capital gains, and the 1099B combined or consolidated statement goes on for several pages. You do not need to fill this out with every line of stock that you purchased and sold as long as you provide us with those forms we just looked at. What you're going to do here is you're just going to put in the financial institution or the payer, and we will know that we have the appropriate documentation to fill in that information on the tax return for you. Now, the installment sale income area, you are going to fill out if you sold a home and the proceeds will be paid to you in a period of more than 1 year. In that event, you are going to put in the description of the property, which is usually going to just be the property address is what we prefer. The date you purchased the property or acquired the property and the date you sold it. And then you're going to put in the rest of this information. Now, the items like depreciation allowed, gross profit percentage, these sorts of things, we would be able to pull from your previously filed tax return if this is not the initial year of sale. If it is the initial year of sale, we will be able to calculate those types of things for you as long as you provide us with the proper information with regard to the selling price, mortgages assumed, cost of the property sold, commissions, and expense of sale. All right, and provide us with any closing statements or contracts you have with regard to the sale. Other income and adjustments. This is actually pulling some of the more common forms of income folks may have. So you're going to look through here, and this also serves as a reminder of any income that you may have received. And you want to make sure you're looking here to look for the forms that we do need you to attach. We're asking you to put in the amount you received here, but there's usually likely other information that we need on these forms that we're asking you to attach. Sometimes there's income tax withheld, other types of payments, non-taxable payments you received. That information is likely provided on the form we are asking you to attach. So read through this carefully. Now, adjustments, the adjustment section is going to be for things like educator expenses. If you are an educator and you paid out of pocket for any classroom expenses, that is a deductible adjustment to your income of up to $250. So make sure you put that information in there. If you made any contributions to an HSA, contributions made to self-employed pension plan, and payments for self-employed health insurance. This type of information is going to coincide with the Schedule C for your sole proprietorship if you have one. And then, of course, there are some other items here, such as alimony paid, any contributions to IRAs, Roth IRAs, and interest paid on a student loan. Put all of that information in there, and we will be able to determine if you qualify for the adjustments to income. Next is going to be the Schedule A, your itemized deductions. You are going to put in here any of the following information so that we can determine if you paid enough to exceed the standard deduction, and if so, we'll take the itemized. And that's going to be things like medical and dental expenses, and we list here the very common types that are allowable. Any taxes paid, state and local, general sales tax. Now, you're not going to be able to take both of these, but we are going to take the higher of the two. Any real estate taxes you paid, personal property taxes. The most common of the personal property tax that you can add in here is any taxes you paid with your vehicle registration. Any interest paid, this is mostly going to be home mortgage interest. And if you had any PMI or mortgage insurance, that's going to come in here as well, just down here a bit. And any investment interest that you may have paid, any interest you may have paid that was not of a personal nature. So this isn't your credit card interest, okay? This is going to be your investment interest. If you paid any interest, let's say if you had a Schwab account and for whatever reason you paid some interest on there, that's going to come in here, okay? Then you're going to have your charitable contributions. And what we're looking for here is for you to indicate between cash and non-cash. And then we have some very common allowable charitable organizations in here for you. If you do not believe the charitable contributions you made were in here, go ahead and put it under other and give us a short description. And then there's the other miscellaneous deductions. You're going to read through these. Most of the time, these deductions are only going to be allowable up to the amount of like-kind income. So you'll want to read through these and fill in the amounts if you actually had any of these expenses. Job and certain miscellaneous deductions. So this is actually quite limited this year, but go ahead and fill in the information and we will determine if you qualify to deduct any of these expenses. Other information is going to be additional information with regard to mortgage interest, employee business expenses, and then casualty, theft, loss. Okay, so we're going to come back up a little bit to the employee business expenses. And here we have checkbox indicators for who qualifies to be able to take that deduction. Read through those. If any of those apply to you, make sure you check the box, and that will determine if these expenses will be deductible. Schedule C, profit and loss from business. You are going to fill this out if you had a sole proprietorship or you engaged in any business activity where you received income. Okay, so we're going to ask that you put in the T or S indicator for taxpayer spouse. Which one of you does this Schedule C apply to? You're going to put in your business name and employer ID if you have one. If you do not have an employer ID, don't worry about it. If you're operating under your personal name and you do not have an actual business name, you don't need to put anything here. Next, you're going to put in your professional product or service. This is just what type of business you are engaging in, and the business address, if there is one, separate from your primary residence. The accounting method, you're going to choose between cash and accrual. Usually it's going to be cash. And then we have some questions for you after that, which are pretty straightforward. Just make sure you read through those and check any boxes that apply to you. This area is going to address any 1099 requirements, so payments of $600 or more paid to an individual. If you were required to file the Form 1099, this is self-reporting that yes, you did have those, or no, you didn't, and yes, you did report, or you did not. And this is self-reporting as it relates to if you received any funds from the Paycheck Protection Program under this business activity. And the rest is actually going to be pretty self-explanatory. You're entering any income that the business did receive, gross receipts or sales. If that does not seem to fit the income you received, come over here to other income and put that in, a little description for us. And then you're going to put in any of these expenses that apply. What I will point out for you here is if you had any car and truck expenses, we do need additional information, and there is another sheet to fill out that additional information. This should be the sum of that. Employee benefit programs usually is not going to or will not include any benefits for you, the owner. This is going to be for any employees you may have been paying as a W-2 employee. These benefits would include things like health plans or a dependent care assistance program. But again, for your employees, not for you as the proprietor. Pension and profit sharing plan, again, is going to be for any contributions the business made for your employees. Any contributions the business made for you would be reported on the Schedule A, as an adjustment where we earlier spoke of. And then we have an area for other expenses over here. If you had expenses that you do not feel fit into any of the other categories that we've provided. Cost of goods sold is going to mostly be for those who are selling a product. Okay, so if you have inventory, we are going to need you to fill out this information here. And that's inventory that has actually been sold. Now, the Schedule E is going to be for your income or losses from rental real estate and royalties. So remember that 1099 miscellaneous had rental income and royalties listed. We are going to dust that off and pull that back out for this area here to put in rental income here and royalty income here, okay? But before we go there, we are going to ask that you put in the property description, the address of the property, and let us know what type of property this is, single family, land, a self-rental. What type of property is it? You're going to put that in there. And again, there's an other option if none of these other categories seem to fit, okay? Couple of questions, or several questions, I should say, that we need you to answer. Pretty straightforward. Read through those. And also, you're going to go ahead and put in any expenses associated with this particular property. We provide you with one of these sheets in the organizer. You can go ahead and make copies of it and fill one of these out for each individual properties that you have. Income or loss from partnerships, S corporation, and fiduciaries. This is going to be a listing basically of your K1s. So what we're looking for is the entity name and EIN of the partnership, S corporation, at the top of the K1. So you'll provide that information so that we can make sure we have all of the K1s you've provided and report that information for you. Now, if you have a home office, a room exclusively used for business, you are going to fill out this page. And at the top, you're going to indicate if this is for the taxpayer spouse or joint, okay? And for which business was this for? Was it for the C? Was it for the E, the Schedule C or the Schedule E? We need to know what we're allocating this to. And then you're going to go ahead and provide us with the information as requested, walking through the form. We are going to need to determine the business use square footage of the home by this information you're providing. And then you're going to enter whether the expenses were an office expense or a home expense. This is the equivalent of saying this was a direct expense. You put that in here. Indirect expense comes over here. So, couple examples. Mortgage interest is going to be an indirect expense because it is for the whole house, not specifically for the office. So the mortgage interest amount is going to come over here under home expense. Likewise with real estate taxes. Now, repairs and maintenance, let's say if you had a repair, or any repairs or maintenance specific to the office, not the whole house, that's a direct expense you're going to put in here, okay? And any other expenses, you're going to put in this last area. So now we're going to look at the cost of the home, and this is how we're going to determine any depreciable amount of the home that we'll be able to take as a deduction. So you'll want to fill that information in. This is the auto expense worksheet I alluded to, and this is where you're going to enter, number one, which business this is for, Schedule C or Schedule E, and the name of the business and the description. Okay, and it's going to ask you some pertinent questions that will let us know how much, if any, of these expenses will actually be deductible. So read through those. And here you're going to enter the business miles driven, commuting miles, and any other miles. Okay. And then you're going to enter the direct expenses for the vehicle. Now, regardless of whether you're intending to take the mileage deduction or an actual expense deduction, meaning taking these figures for these expenses and directly deducting those versus the mileage times whatever the mileage rate might be for that year. Regardless of which method you're using, we still need to know the business miles to determine the deductible amount of the actual expenses. So we do actually need you to fill out both of these regardless of, well, you don't need to fill out the bottom expenses if you do not intend to take the actual, but if you want to see which is going to be more, you need to still fill out both. And then the asset listing for 2021. This is an asset listing for any business use property. Predominantly, this is going to be used to list your real estate if you have any rental real estate. This is also going to be used to list any machinery, equipment, furniture, or fixtures, and so on for any assets you have for the business. Now, again, we're looking at Schedule C or Schedule E. The description of the property. So this will be, say, the address of the rental property or Canon printer. I don't even know if Canon makes printers, but yeah, whatever the description of the property is, the date you acquired the property, not you personally, but contributed it to the business, let's say, and the cost basis of that property. Now, things like method, life, prior depreciation, if there was any Section 179 expense taken, we will be able to glean that information from your previously filed tax return. If this was not, or if the asset was not on your previously filed tax return, it's the first year you've acquired the asset, we will be able to do those calculations for you. But we do need you to supply us with the information regarding the date the property was sold or the asset was sold, if applicable, and then the sales price and any expense of sale. And what we do look for here is things like a closing statement, HUD statement, so that we can verify all of the pertinent information needed to make sure it's filed correctly. All right, that concludes our individual tax organizer walkthrough. You can get this tax organizer, if you do not already have it, on our website at tmtaxpractices.com under the documents page. Please feel free to email us at info@tmtaxpractices.com if you have any questions. And you can also follow, like, subscribe, connect, do all of those fun things with us on YouTube, Facebook, LinkedIn, and Instagram. I really appreciate everyone who took the time to walk through this video with me. Have a great day and have an even better tax season.